In today's video, I will talk about the DSCR loan. You will learn what is DSCR loan, what is benefits to DSCR, general requirements of DSCR, and the pros and cons of DSCR. Hi there, welcome to my channel. I'm Lin. I'm here to share insights on real estate, personal growth, and entrepreneurship. Let's dive in and start building your path to success. DSCR is a debt service coverage ratio. This is the abbreviation for DSCR. That is type loan that is used by investors to finance the rental properties. So the key concept of DSCR loan is making sure that your rental property revenue versus your debts per month 1.0 above. For instance, you have a property generating a rental income for you $1,700 per month. You have a liability on that $1,500 per month. So that's give you about 1.13 ratio. So that's in a good margin. Higher the rental revenue, lower the debts is better. Give you higher number ratio, so that is good. The minimum requirements is you have a good standing credit score, then you have a down payment, then the subject property can bring you good rental income versus the debts. Again, it's all about that. Then what if your subject property, that your property you are inquiring is vacant? No problem. We will use a appraiser to evaluate the market rent for that property that you are inquiring. So we're going to use that number. If the property is occupied, and then we're going to use either the lower end of the appraised market rent or current rent. If your current rent is 17, your appraiser comes in and appraisal shows like 1650, we will use the lower part. We will use 1650, the market, the appraised rental value on that. So let's talk about the what we don't need. We're not looking for your personal income. That means we don't need you submitting your personal pay stub, your personal tax return. We don't need that. We're not looking for that. We're using the revenue generated by the subject property, the property you are inquiring. So that's what we use and we're looking for. Then use that number versus your potential future debts on this transaction. Then what is the long terms? The long terms on the DSCR loan, 30-year, 40-year can be shorter. And there's one option is the first 10 years. If you got a 40-year loan, just saying, then your first 10 year can be interest only. You guys still pay property tax and insurance, homeowner insurance, that's 100%. Then the principal is not touched for the first 10 years. The reason you're doing that is some investors want to maybe sell this property sooner or later, probably sooner in the 6 months, a year later, so they'll have some capital gains already. Some the reason is because they probably will refinance into different type of loan, and or they could be just adding more on their portfolio, building their portfolio. So that's numbers reason. Those three reasons I see the most. So then the pro of the DSCR loan is just you have the flexibility, and then you have the flexible payment option, like I described it, the interest only payment for the first 10 years. And then you also can expand your portfolio. The cons is require you have paying large down payment versus a primary residential buyers. Then interest rate is higher versus primary residential buyers. So those could be the two major cons. And then not every single lenders will have DSCR loan option, but majority they're planning we offer that, I believe, on the market offer this type of loan option. So I hope you enjoyed today's video. you want watch next video. If you are a small business owner like me, you are a real estate agent, you own salon, or you are a independent contractor that like you driving a truck, or you have a nail salon, restaurants, your income does not reflect on your tax return, but so we usually take more deductions on our tax return to reduce the liabilities on our income paying the taxes. So bank statement loan, we're looking for not your personal income tax. We're looking at your bank statement that your business average deposit, monthly average deposit towards to your bank, so we know what is your income. Depends the type of business. We could use 50% of the deposit amount. We could use 75%. All depends the different type of business. Okay, so and that video I will publish about within a week by next Thursday. So you will see that. So I thank you for your support, and please, if you're on YouTube, please subscribe. I need more subscribers. If you're on TikTok, share my video and follow me. I will make those type of videos. Let me in a comment, have you done DSCR loan? If you have, was that a good experience or not? And if you have not done that DSCR loan, are you looking for, do you have more questions? If I don't know, I will do research. I have a good team behind my back. And then if you did not a different kind of investment loan, let me know. Maybe I want to learn some too. They're planning on there, and please let me know. Okay, thank you for your support. See you in next video.